Hey guys, welcome to my channel. So this is going to be an interesting week, and I want to make sure that you guys don't get blindsided. So I want to make this video to share some upcoming economic events and reports that's coming out this week, just to make sure you guys know what's going on. And if you're a trader, this should already be a part of your routine, checking economic calendars. Market Watch is a pretty good one. I've been using it for years, and it just gives you an overview of what's to come for the week. That way you can kind of plan ahead and know what's going to be happening. So I'm going to also include some of my own ideas related to the calendar and economic reports coming out this week. So I'm going to start off with Monday, which is there's nothing coming out Monday. So Monday is going to be business as usual. And then Tuesday, we're going to have a CPI reading. And CPI is what we use to measure inflation. Um, Last year, it was at record highs. And then the Fed has reiterated numerous times that their goal is to get CPI down to 2%. I actually found a really good tweet, and actually it's from the president. And in the tweet, it just comes off as if he doesn't understand how inflation works, but I'll share it with you guys so you guys can now know how inflation works. So, our president tweeted, "Let me be clear to any corporation that hasn't brought their prices back down, even as inflation has come down. It's time to stop the price gouging, give American consumers a break." Now, this might be well intentioned, but that's not what inflation is. Inflation is not prices coming back down. When I saw this tweet, I thought it was satire. I thought it was like a fake account, but it really is the real account. And in the context from Twitter, they kind of explained what it means, right? So, as long as the inflation rate is positive, prices are increasing. The fact that inflation has come down to 3.2% in October means that prices are still going up, albeit at a slower rate than before. So, what that means is last year inflation was about 10%, right? If prices have stayed flat from this point last year to today, the inflation rate would actually be 0% with no change in price, right? Inflation's measuring the rate of the increase in prices. So inflation going down from 10% to 0%, it does not necessarily mean prices are coming down. And just because of the way that it's measured, generally I believe that it's gonna come down, right? Like I don't believe prices are gonna increase 10% every year, right? That I don't see that happening. So, but I thought this is a really good tweet from the president and a really good opportunity for the general public to understand a little better how inflation works, right? Like if inflation goes from 10% to 2%, it doesn't mean prices are gonna go back to where they were the last time inflation was 2%. So that's really important to understand, because on that basis, it's more likely inflation is going to come down just because it's been so high, right, in the past. It's kind of like driving a car, right? If your car is increasing, like it's accelerating at like 5 miles per hour every uh, minute, whatever, right? There's going to be a point when you can't increase any further because your car is like at top speed. And that's kind of what this is, right? Like there's going to be a rate in terms of the rate of inflation where it's going to be really hard to go much higher than that without significant damage to the economy. Um, so just based on how it's calculated, yeah, I think it's going to continue to go down. So that's going to be interesting. And then Wednesday is going to be producer price index. PPI is a little different from CPI because I think CPI tracks just for like all for consumers, whereas PPI only tracks like domestic producers, right, their prices. So there's a really good article from Investopedia that breaks down the difference between CPI and PPI, but basically PPI can kind of be an indicator to what CPI is going to be, right? So like if the cost of outputs are increasing in value from producers, you can generally expect to see that same increase reflected for consumers. Or there's times when cost for producers is flat, but cost for consumers is increasing, right? But PPI just gives you another like look into the cost of goods going up in value or down. So that's all interesting. And then on the same day, on Wednesday, December 13th, we're going to actually have a FOMC interest rate decision. And that's going to be the final interest rate decision for the year. So after this one, we're in 2024. And it's going to be kind of a interesting meeting with Jerome Powell at his press conference because he's in a tough spot. Inflation is coming down, and the market is anticipating significant rate cuts next year. Like I've heard people say 4 rate cuts, I've heard people say 6. But the Fed's in a tough spot because unemployment is really low right now. And at the same time, wages are increasing. So I think the Fed is a little worried about signaling to the markets that we're gonna have a lot of rate cuts next year. So I don't expect that, to be honest. I think they're gonna play it safe and they're gonna keep saying things like data dependent, and we're gonna wait and see. I don't think the Fed has any incentive right now to signal rate cuts to the market because if they do and rates start going down, it's gonna kind of undo what the Fed's working towards. And we're also we're nowhere close. Well, we're not at 2% inflation yet. The Fed has made it clear numerous times to Congress that that's their goal. Their goal is to get us back to 2% inflation. We're close to it, but we're not there yet. And I think this final stretch is going to be really, really hard. So I think now more than ever, it's really important for the Fed to kind of stay the course and to, continue to appear hawkish, where they're not trying to tell the market, like next year we're going to cut rates significantly. But we'll see. Maybe I could be wrong on this. I think it's in the Fed's best interest to not signal that to the market. So it'll be interesting. And then Thursday, we're going to have initial jobless claims, and we're also going to have U.S. retail sales. That's the two that I think are important on Thursday. Mainly because both of these give insight into how the consumer is doing in the current environment with high interest rates. So far this year, we've seen consumers continue to spend. So, we'll see when that starts slowing down. But right now, people are spending. Unemployment is low. Wages are increasing a little bit. So we'll just see over time, like at what point will people start to really start feeling the squeeze of higher interest rates? And not just people. High rates affect businesses, governments, consumers, and they're all interconnected, right? So like it may not affect everyone the same way. Like your neighbor might have a hard time selling his house. Meanwhile, you might get laid off from your job. Or your business might have less customers because people are spending less. So I just think high rates affects everyone differently. Or some people, they could just be borrowing at higher rates. That could be the impact that they feel. This article from Barron's, oh God, it won't even show up. Let's see if I can find it again. This article, a strong jobs report makes big rate cuts unlikely in 2024. And I think they're saying the same thing I'm saying, which is basically that I don't really think the Fed's going to signal strong rate cuts or big rate cuts in 2024. I think it's too early. I think we're just not where we need to be with inflation for them to signal that. But I do feel like parts of the market and the economy is getting squeezed by higher rates. And I think we're gonna have to continue to go through that until if the Fed's serious about getting to 2%. If they come out and signal that 2% is no longer their target and they're gonna I remember during COVID times they had made a kind of similar claim about like the 2% where they don't need it to be 2% all the time, just on average across certain periods, I believe. If they came out and signaled something like that, then maybe we could see something change. But I think right now, as long as they're focused on getting to 2%, I think it's too early for them to signal that they're going to cut rates in 2024. But again, I'm going to bring it back to this final tweet before I close everything out. I love this tweet. I just think it's so funny. Let me be clear to any corporation that hasn't brought their prices back down, even as inflation has come down. It's time to stop the price gouging. Now, this isn't entirely wrong. I'm sure there are companies out there raising prices simply because they know they can, right? Where maybe the cost of their inputs went up by 10% and then they're increasing prices by 30% because that's what everybody else is doing. So that definitely is a thing too. But yeah, for inflation to go down, prices can stay flat. Just remember that part. And don't get caught up this week trading during CPI or even during FOMC meetings. It's definitely not for the faint-hearted. So be careful out there, and just be ready for it. But thanks for watching this. I hope you guys like this video. If you guys have any comments or if you feel differently from I do about anything I said, let me know in the comments. I want to hear from you guys and see what you guys think.